Good morning, YouTube. For the last 30 minutes, I've been trying to figure out technology. I feel very old this morning. I feel very old this morning trying to figure out my OBS, my streaming stuff. So, good morning. I finally made it. When I first went live, I was on a different YouTube channel that I didn't have audio. I realized I didn't have audio after I realized that, or before I realized that I wasn't even on the right YouTube channel. So, but anyways, good morning. My name is Quentin, co-founder CEO of Bloom Entities. And this morning we are going to be trading futures, right? Marcus was live this past Tuesday. Um, and that's kind of how it'll run from here on out. We can come together and kind of figure out that this is something we really want to lean into the live space, the YouTube space. We want to thank all you guys who have subscribed to our channel up to this point. If you've enjoyed our content up to this point, and you have again, I'll get to the next point. But if you've enjoyed our content, shoot us the likes and the comments and all that. We're paying attention. Always trying to make sure we're providing content that's relevant to you guys, right? We're really passionate about sharing our knowledge. We are not masters in this space by any means, but we've been really careful to learn and grow our knowledge in this space so we can do this, so we can share our knowledge, and furthermore, so we can turn trading into something for us that is a one steady revenue stream, yes, and to use that steady revenue stream to fund all of our other endeavors, right? I think that it's such a beautiful opportunity for all of us to lean into. And again, we're super excited to be able to share that. And our goal is to, with our success, we get to share that success and endow that success onto others as well. So let me get set up here. I'm gonna pull up my Top Step account. Let's see. Again, technology's hard, but I should have it from here. Mac OS screen capture. Yes, that sounds good. No, I don't like that. We'll can that. Hold on. Window capture. Boom, bop, bam. Look at me go. Look at me go, guys. So yeah, we'll start off. I'm just gonna get us into. I promise I'll fix all of this. Okay, and then I'll put my face in view. It's still too damn big. I told you I was feeling old, man. Give me a break. All right, that works for now. But all right, so we're set up now. I promise this is more frustrating for me than it is for you. I promise. At some point, I'm gonna get up and get a coffee refill, but let's start to get into this here a little bit. Bam. Let me look at that. Look at me go. Switch the order here. Bam. That's what I want. That's what I want. So the next step would be yes. Yes. Okay. So every trading session we'll start here, right? So I woke up about now about 45 minutes ago. So I haven't even started my little pre-market routine, pre-market research. For me, for us, it would always start in checking what the just general overall macro outlook will be for that day, as well as just kind of internalize what has been going on in previous days, and even furthermore internalizing, okay, what's going on a broader level, if that makes sense. Let's take a look here. Unemployment claims this morning came, pretty close to expected. Unemployment claims. So this website right here is called Forex Factory. This is kind of my main resource when it comes to our economic calendar. There's a handful of other resources out there that anyone can use. This is a free one. There's many other free ones. Again, I always recommend having an economic calendar to observe. All right. So over the past couple of weeks, we've started to see the job market start to cool a little bit. So to see our unemployment claims come in at an expected level is, I guess, maybe somewhat encouraging since it has been cooling off. Maybe it coming in as cooling off is it coming in as expected could indicate that, okay, it is cool, not bad, but just cool level. So unemployment claims is the number of individuals who filed for unemployment insurance for the first time during this past week, right? And this is a folder we see every single week, something to definitely get familiar with. I just like Forex Factory. It gives us these little nitbits. So Forex Factory notes, this is the nation's earliest economic data. The market impact fluctuates from week to week, and there tends to be more focus on the release when traders need to diagnose recent developments or when the reading is at extremes. Right? And I just kind of preface that, the job market is of high concern. Concern not insofar as to say that it is bad, for lack of simple terminology, for lack of better terminology. Why traders care, and I'm just kind of reading this ahead. Although it generally is viewed as a lagging indicator, the number of unemployed people is an important signal of overall economic health. So this kind of just tells us why this is an important thing for us to look at and observe. Cool, let's hop off that. So on our economic calendar, what we're primarily going to be concerned about, especially on an intraday level, will be our high impact folders. There'll be some other ones like, this trade balance folder. Trade balance days are always interesting days. This star, so this release was delayed by 21 days. So this one's government was shut down. So there still is kind of some data trickling through that was, missed, wasn't able to be released while the government was shut down. We'll close that. Okay. So nothing, I'm too concerned about today. As far as something that will surprise me and something that will cause very quick, very dramatic price fluctuations in the market. So next is to check sentiment. For that, we use our Baby Pips tool. Baby Pips tool, we're pretty neutral, leaning a little, skewed a little bit towards the risk on side of things. If you don't know what risk on is, you can read it here. Excuse me. So here we go. I'll just do a little reading for us, just so we can, all kind of wrap our minds around this, right? So we've made countless videos on, risk off. We've talked about it a million times in our videos. Something that is very important for us to be aware of, understand if we are in a risk on or risk off environment with respect to the asset that we're trading. So like right now, we primarily trade gold. This is XAU USD. So this is gold, XAU. That's the chemical symbol for gold. And you can see we're skewed towards the risk off side of things. And just for the sake of this slide, because I do want to get to the charts, risk off on gold would essentially mean that money's being poured into gold because gold is a risk off asset. So when the market is feeling less, when the market is less likely to take risks, when the market feels less likely, um, feels less risky. I'm trying to say this as simply as possible. Right? It makes it hard. Esoteric concepts, explaining it in a simple way is challenging, but I love that challenge. Something I definitely want to grow in. But when we're in a risk-off climate, money will be poured into risk-off assets, right? Because when we're in a risk-off asset, that means if people are feeling not risky, that doesn't mean people aren't doing anything with their money. The market still has money that they want to put into the market. But in a risk-off environment, money's being poured into um, less risky assets, like gold. Is one of the main reasons why we've been seeing gold absolutely skyrocket, while we've seen some geopolitical instability, as we've seen a drop in the dollar, um, which I'll definitely talk about today. So yeah, gold send risk off. Let's go to gold. So here's gold top step funded account. I'll trade some M&Q every now and then as well. So Marcus and I, we were playing with silver. I don't want to put Marcus in there. I know he has played with silver, but um, my fun adventures, I'll isolate to myself, because silver, boy, oh boy, is that thing just massively volatile. And you put one contract in and your leverage is just absolutely through the roof. Um, so earlier this, today's Thursday. Earlier this week, yeah, this week, I was like, let's play around with some silver. I entered in 2 contracts on accident. I definitely only should have done one, but I was doing a trade on gold earlier the day before, and I just didn't adjust my number of contracts on there. I was not being a good trader in that moment. So I entered 2 contracts on silver, and it was your account is ineligible for funding. So yeah, in the swiftest move you'll ever see, my max loss limit was hit. So quick, absolutely so quick. So yeah, we learned a little bit about silver, um, and I also learned, because the day, even that day, I was like, man, like I was that close. Then I would have the biggest trade of my life. Yes, but yes, but because one thing I always hold on to is we can't connect the dots going forward, right? So we enter a play like that, it very well could go our way, but what's wrong with it? Our leverage is just way too high. We're way too over leveraged. And so much of great trading, you can almost account all of great trading is not over leveraging. And you'll hear me say not over leveraging early, all right? Because when I'm in a winner, I want to let a winner run, and I want to pour into that winning position as much as I can, given that my risk is essentially at 0, right? I won't over leverage. I'm telling myself this, right? Even though I just blew my account on silver, but just regraining, rewiring, hardwiring the brain with the right things. That's, again, so much of what trading is just constantly evaluating, constantly assessing where our mind's at, how we're framing things, right? Because we're freaking human, right? We see 150,000 in front of our face, and we want that thing, right? So it's very easy to just lose it for 10, 15 seconds. I kid you not. And you enter a position, you're way over leveraged, and bam, it's over with, right? And the context is important too, right? Because when we're trading, if we're trading capital, if I'm trading $50,000 of my own money, that's a little bit different I'd execute that a little bit different than how I'd execute this 50K funded account, right? Because with the 50K, with the funded accounts, you have your max loss limit, you have your daily loss limit, and you have to kind of stay within those margins, right? Um, so even more so in this context, we have to be very, very, very careful with our leverage. Okay, I got a message from the school. I'm just making sure there's I don't have to do any damage control. Cool. So today I'm at 1:57. I'm hopping on a flight and going to Downers Grove, Chicago for a dental school interview. Um, so really great day. I mean, you could say that tomorrow is my interview day. One of the bigger moments, bigger days of my life. Honestly, up to this point, at least professionally speaking. So yeah, we're fired up today. It's a beautiful, beautiful day to trade. So we've done our macro. We did a little macro probe, I could say. We looked at sentiment. Gold is sitting risk off. Overall, we are a little bit skewed on the risk on side, so a little bit of confluence there. I gotta check back to my stream platform, make sure my thing doesn't shut down because that has happened to me before as well. But let's see. I'm sitting here on. Look at me. I'm over here on the 1 minute. So next, I'm done rambling now. Let's assess some of our levels, right? Look at this monster, this monstrosity called gold. And so there's just a few things that we like to mark up on our charts. Just a few things, right? I like to keep my setup as clean and crispy as possible, right? And so in that light, I'm gonna delete my little boxes there and restart. Geez, just so much imbalance along this run to be filled up that will most likely be filled at some point. Once the bulls kind of relax. There's a guy that I follow on Instagram. He's in a long position on gold. I really like him actually. I think his platform is Nick Trader FX. But Nick Trader, go to who I'm following or whatever. But I really like his insights, especially when it comes to the macro. But this guy, he entered shit. Let's see, and he talks about it on his Instagram. I just really like the way he frames it. He's probably entered down here. And he's holding his position. He's probably upwards of 200K now on that single position, which is just awesome. It's awesome, and especially because his thought process and reasoning behind the position is macro driven, right? That just really speaks to how we approach things. Excuse me. So what we're gonna do is first off I'm gonna lay out some boxes to indicate areas of inefficiency. All right, again, these are things we have talked about countless of times. So if you don't understand what I'm doing, again, this is a trading session for me. So I want to put myself in a position to execute trades today in this session. So this is the work that must be done first. Okay. Draw that out. And again, there's just a few things we like to put on our charts that's areas of inefficiency, otherwise known as imbalance, fair value gaps, and then our decision-making levels. And I have to apologize to Marcus because the other day, Marcus is my favorite streamer. So the other day, this is probably 2 weeks ago, when he released his latest video, maybe his second to latest. I just learned a new word actually. His penultimate video. Penultimate meaning his second to last video. Ultimate would be his last video. That's a little nugget I got yesterday actually. Marcus's video, but the decision making levels, right? So up to this point, I had, when it comes to me putting my decision making levels in, and it's the thought process that hasn't changed at all, right? Decision making level is an area in price where decisions are made. Ultimately, it's where it's a place in price where here's a good place. A place in price where price will reject, where price will decide to burst through or consolidate along, right? So you can see, shoot, this is on the 4-hour right here, decision making level. And so up to this point, up to before I reviewed Marcus's video, I just kind of go about it like that. And then over time, okay, I started figuring out, okay, that 3 candle structure, okay, I started to figure it out. And then I thought I had it. Then I watched that video. I was like, oh man, I'm wrong. I'm wrong. Again, the concept doesn't change at all, but it's just particularly the 3 candle structure. And I promise I'll show us what that means, is just so I can show off the marks and just to show them I know what the heck I'm talking about, right? So again, just looking for areas of inefficiency. There's some more down here, but shit, look where we're at in price, man. We won't get down here possibly for a while. We'll get up here, okay. Now we're talking about a different story. And it's just it blows my mind just how stern the market is, how stern price is in filling these boxes. Like when it comes to this box here, this area of inefficiency, when it's time for that thing to get filled, the moment it gets filled, I promise you it will touch literally right there at the edge. And then it'll decide what to do from there. Like it'll eat up that box almost to the point, right? Hence why it's an important thing for us to excuse me, for us to mark up on our charts. And so I'm now I'm just trying to rewire my brain in finding the correct 3 candle structure, right? And so let's see, I can use this probably and do a little demonstration. Yeah, let's hold that real quick. Where is my good old Sharpie? Ooh, and I'm gonna need 2 colors. This is horrible. I hate ruining expo markers, but oh well. First candle's the largest. Second candle. Bam. And I realized blue and purple are kind of looking the same. So candles 1 and 3 are the same color. Candles 1 and 3 are the same color. The first candle is the largest. Second candle is the cream of the Oreo, right? And you really can't tell the difference, but I promise the line in the middle is a different color than the 2 outside lines. So that's what we're looking for, right? In my really, really crappy example of a 3-candle decision-making level structure. So let's see if I can continue to train my eyes here. Let's just get a quick look at price, see what price is doing here. Not loving much. Kind of moving sideways this morning a little bit. Again, nothing big news wise that I foresee impacting price. And today is a trade balance day. Typically, and this might be something to jot down in your journal. Just kind of store for safekeeping. And definitely something for you to back test for yourself. But on trade balance days are typically pretty sideways days. We can still trade it, right? We can still trade through zones, like the zone we're in. Once we kind of get to the upper echelon of it, maybe we can make a play to sell off of that, or if we get to the bottom of this, we can buy off of that. So there's still plays we can make, right? I certainly give myself the autonomy to trade during conditions like this. Why? Because I figured out, I feel like I have a good understanding of how to control my leverage. At this current moment in time, I have to put an asterisk because of my behavior on silver earlier this week, right? I make jokes about it. I sent an audio message to market that day, and we were laughing about it, and just you said like all you could do is just laugh, just because it was like, wow, it's crazy. So I took that little itty bitty note of information, right? And again, just continuing to hardwire my brain. That's a really long-winded, roundabout way to now get back to the fact that just be understanding your leverage, and when your position goes against you, when you made the determination that you have lost that position, right? Cut it, kill it, end it, close it, right? Because the next play, there will always, I can't overemphasize the fact that there will always be another play, right? There will always be another play. The greatest trade of your life is a trade that you haven't made yet. Down the future, down the line, the market isn't freaking going anywhere, right? If your position starts to get away from you, cut it at $150 instead of $650, because during that whole time you're biting your nails, just hoping and praying that it'll turn back for you, but it never does. So just if you take anything from this video today, I'm throwing a lot at you. I apologize, but understand your leverage. Don't over leverage early, and don't over leverage early. And when your position gets away from you, when you have made the determination that you have lost that trade, cut it, kill it, and wait for the next play. There is a probability that price will end up going in your direction. Cool. Take it, right? But do it off good information. Do it because you have made the analysis, right? Not because, okay, I need to get that back. Market took for me, I need to take back. That's not the headspace we want to roll in, right? And so much of what I'm talking about here, right, it might seem simple. You might say, well, no shit, Q. No, duh, right? But anybody that's been in the game knows, right? So I'm always going to be a vessel to spread that information as well. So we're moving sideways. I'm gonna let's take 90 seconds, 90-second break. I'll leave my chart up here. I am going to use the restroom and possibly fill up my coffee. Don't tell anybody. Stand by. Okay. So coffee is a brewing. All right, so enough yapping for me. I know you guys are tired of hearing me talk. What am I looking for on gold anyway? Right. Let's kind of do a little probe as far as, okay, if we go, if this happens, I'll enter here. If this happens, I'll enter here. That type of deal. So again, trade balance days, and again, today is a trade balance day, are typically days that will move sideways. Right. There might be a little window in our morning session, in today's morning session, where we might get a little movement. So of course we want to be prepared for that. Little inefficiency down here we could play for possibly. But let's see. So on the seller side, right? If we get seller's pressure, I will look for this area of inefficiency to be filled. This 4-hour inefficiency, right? Because earlier I said, and typically at the ends of these areas of inefficiency are decision-making levels. Anyway, so where's my tool at? What do I want to use? Where's my tool? Don't want to use that. It's in here possibly. No, it is not. Where's my little zigzag tool? Yes. Yes. So we could see price do one of these things. Touch, right? And then from there, we could consolidate along this. We could reject from here, or oops. Okay, let's end that there. Got a little crazy there for a sec. Or we could consolidate and then continue to shoot down, right? If gold stays in risk off, I don't like that necessarily happening. Oopsies. But we'll see. So that's what on the seller side, if you will. That's what I'm looking for to happen. Maybe I should have done that on. Make sure I'm still in view here. Yeah, it looks okay. So again, we could consolidate here and then start to move in here. Once we start to move into this area of inefficiency, I'll really like to play this down to the bottom of that area of inefficiency, right? So that's seller side imbalance. Seller side imbalance is what my play would be on the seller side. On the bullish side, shit, man, we're playing at the all-time highs, and playing with the all-time highs, particularly on this freaking asset, particularly on gold. No one knows. No one will be able to figure out. We can't connect the dots going forward, right? We'll just have to kind of see how things play out. There's a handful of things that are playing into why gold looks like this. it's freaking crazy, and you want to see something funny. So I started the first day I looked at what the market is, what the gold market is, would be May of 2023. And so just to give us an idea of, okay, oh shit, yeah, like that's crazy movement. Price is currently at, we're looking at, let's call it, because it'll probably hit there, if not today, if not this week, maybe next week, who knows? Again, at all-time highs with this asset, this thing could continue just to get crazy. At this point, nothing will, nothing will surprise me, right? But just for the sake of simplicity, for simple math, let's say gold is now at $5,000, $5,700 per ounce, right? The numbers we see, this is gold per ounce. So $5,700 per ounce. When I started trading, when I first looked at gold, May 2023, May 2023, gold was literally half the price of what it is now. Crazy, less than half. It's absolutely nuts. Absolutely nuts. Yeah. And I remember like there was times through here, just as we continue in the space, we'd get up to somewhere like here, like damn, gold has to go down at some point, right? Joke's on you. Get up here, man, gold has to go down at some point. Joke's on you. And here we are. Just absolutely mind-boggling. What a crazy run. What a crazy asset. Yeah, gold is gold. Gold is gold. That's the most intuitive thing that I have said today. What we put bullish push candle on this 5 minute to get the one. Usually I don't like to spend too much time on the 1 minute just because you just get so caught up into the tic-tacky little movements. So I'll do most of my execution sitting on the 5 minute, but utilizing the information from the higher time frames, right? Stop. The dog cries in the morning for absolutely no reason. I do want to take a look at my MACD on. See, just look at this thing, man. Look at this thing. So even with our MACD, we say once relativity becomes an issue, relativity meaning once this white line becomes relatively far relative to where it normally goes to, right? Then we can start to think about the possibility for a turnaround. But with gold, it's not as simple as it is with other assets. Excuse me. Ooh, I need to get my coffee. Not as simple, right? Even on the 4 hour, look at this push, man. This push, we're relatively crazy far up there. Look where we're at relative to where it normally goes up to before it turns around. Right? And so at some point we'll see this go down, move down, even if there's not a major drop in price, right? Again, that might be something that I could say is unique to gold. I'll say silver is a whole nother story right now. Silver's nuts right now. It's nuts. But again, so you see on our higher time frames, so I execute on the smaller time frames, given the information that I have extracted from our larger time frames. Again, that's something to know. I'm going to repeat it. I'll make my executions on the smaller time frames, 5 minute, informed by my higher time frames, plus the macro. I can't leave that out. Whatever the macro landscape is telling us, and usually that is more reflected on our higher time frame. So it kind of goes. You get a 2-for-1 there. So again, that's why when I drew out my areas of inefficiency, I did it on the higher time frames. I did it on my 4 hour, right? Those areas aren't exactly reflected the as you trickle down the time frames, right? But I know in my head I have understood. I've made the markings that are reflected and representative of my higher time frames. The high likelihood that we will just continue to move sideways here this morning. We'll go for about 7 more minutes. We'll be using on these lives, and we'll go live for about an hour. Just because once these things get lengthy, I mean, yeah, kudos to you. If you sit through, 90 minutes, 2 hours. But for us, for the sake of our time and our mornings, we got things to get to. I got to pick up my dry cleaning at 8 o'clock. So that's my next play. Get my bags packed and everything for the Chicago trip. Quick turnaround, fly out this afternoon. There all day Friday, then I come back Saturday afternoon. So, it'll be time to start preparing for the finishing the prep. Not start preparing, finish the preparation for that interview. But before I leave you guys, of course, I'll give us some nuggets, some levels to kind of look out for with respect to MGC. That will kind of give us just get us keen to what I'm looking at with respect to, okay, here I'm going to take a buy. Okay, if this happens, I'm most likely going to take a sell. When that happens, I'm not going to be over leveraged early. I'm going to understand my risk. And I also am going to understand that if the market goes against me and the market proves me wrong, I'm okay with that. I'm going to cut it, and I'm going to prove the market that I'm right next time. Hold on, let me grab my coffee. I'll take you with me. I let it get kind of cold. Oops. I was yapping too much. A little brown sugar in the coffee. Nothing crazy. A little cream. I'm a simple guy. Alrighty, friends. Excuse me. Okay. Let's see where we're at. Yeah, starting to get just a little push there. What we see, sellers keep us in range there. Ooh, almost through candle structure there. Staring at my screen. Crazy. I got blue light, don't worry. I want to do research on that. So I want to make sure my thought process is correct on there. Yeah, so a few things I'm kind of researching, looking at right now. We're in constant market research. As a trader, at least for us as traders, right? I don't want to project onto anybody else. but just having a really high understanding of, okay, what the heck is actually going on out there, right? We see so much rhetoric, um, we see so much crap on social media that inevitably skews people's feelings towards things one way or another. Forget that. Screw that. I want to understand what's actually going on in the markets geopolitically. Who's pulling the strings? Why are they pulling the strings that way? Um, so it turns decision making, right, and life into a much less stressful, emotionally swaying ordeal, right? How often does something happen and emotions just go crazy, right? But do, does do people really understand what is actually going on? 98% of the time, no, no. So even more so for us, we just always want to be honed in, cued in to what's actually going on. So, so one thing, I initially I started doing this research earlier this week, and will continue to do this research through the weekend and here and out. But it'll be the movement of the U.S. dollar, right? And up to this point, what I've learned, determined, figured out is, even going back to Trump's first term, he was never a let's make the U.S. dollar as high as possible, right? And the lay person might think, well, that doesn't make any sense. Like, we're the U.S., we want the U.S. dollar to be as valuable as possible, right? We want to, when we go to Europe, our dollar to be as impactful as possible, right? We want the vacation to be cheap. However, that's this this big of a picture that is this big, right? Because what does a high U.S. dollar mean? Think about it for a sec. If the U.S. dollar is astronomically high, what happens? So there's a good old thing called exports and imports, right? In a country whose trade deficit, and that's kind of one of Trump's things. He was kind of working on that with Elon, with the Doge, and that whole thing went to shit. But nonetheless, forget all that. Our trade deficit is something that has been and continues to be, again, being worked on, an issue within the United States, right? If our US dollar is extremely high, nobody's going to be able to buy the things that we make in the United States and export to other places. It'll just be too costly for other countries to buy from us, right? Think about it, right? Think about it. Think about the trade deficit. Think about our debt, right? That's a really major issue, right? So with a declining US dollar, what we'll get is cheaper exports for other countries to buy from us. The next part of my research here will be into seeing the connection with the BOJ. I know Marcus knows a lot more about the BOJ and their kind of global impact than I do. It's time for me to catch up. But I know there's something with respect to the BOJ. Then because up to this point, the Japanese yen is, how can I say this? The Bank of Japan desperately needs to raise the value of their currency. Once a particular country's currency just gets valued too low, it becomes a serious issue. So I believe my hypothesis is that there's some sort of collaboration there. And because when the US dollar goes down, you'll see the yen start the US Japanese yen pair, you start to see a shift there. So there's something there that I desperately want to get to. Excuse me. So yeah, with exports, with the BOJ, the U.S. dollar falling. Okay, yeah, it might be a little bit more expensive for us to go to Japan, to go to Europe. Our dollar might not get us quite as far. But again, that's this part of a picture that is this big, right? Because when we touch exports, and we can get into imports, and we can then get into the stuff and the prices of things that we pay for, we utilize, we eat every single day. So that is my cue for us to constantly, frequently take a freaking step back of what's going on. Get off your social media every now and then, please. I promise it's good for you. The only social media platform I'm on is Instagram, and that's primarily just so I can very infrequently. I need to be better. I don't want to frame it like that. I don't want to frame it like that. I'm constantly just mulling over, okay, what do I want my online presence to be, right? Because I think it just, as I project to the future, I'll be, I aspire to be a private practicing oral surgeon. And so from where I'm at now, I kind of want to, look into the future and, just kind of see how those things will kind of combine with respect to my personal brand, with respect to my businesses. So there's a lot of thought going on in there constantly, right? But in the meantime, I do want to post more on Instagram to let out my thoughts and just build the personal brand. But anyways, the only thing I'm on Instagram, I don't doom scroll. I hate being on this thing. I think my screen time. This isn't to brag at all. But if I'm under 3 hours, I'm happy. Under 3 hours, I'm happy. And a lot of that time is while I'm driving, the phone's on or whatever. I not once during the last 2 years, I've been pretty much off Twitter. Haven't been on TikTok like since COVID. I haven't once felt like I missed anything, right? Why? Because I market research. I just get to actually find out what's going on rather than listening to emotional human beings who have no idea what the heck is going on, talk about things that they have no idea about. I'm sorry if that hurts your feelings. It's just true. I'm sorry. So yeah, stay away from the rhetoric best you can. The floods and floods and floods of videos, reels, TikToks that just further ingrain you into the same thought processes and into believing the same things, into believing that, okay, people who don't believe the same thing I believe in are wrong, are evil human beings, even though they are human beings and they have emotions and they were grown up and raised in an environment that surely was much different than your own. So how can you blame them for maybe believing something that's a little bit different, right? They think you're crazy. They're just as validated as you, right? And vice versa. So that's going to be my spiel for this morning. With a lot of the immigration stuff, just so much emotional rhetoric, right? So much emotional rhetoric, and I'm not going to get into that issue, right? I don't think that's something that's super relevant to our platform, at least. But yeah, my encouragement this morning, what I'll leave you guys with is focus on the things actually going on for us traders. What that does is it allows us to just make really highly informed decisions. Emotions to the side, right? Emotions to the side. That's an important place for us to be able to trade in. Okay, so let's see where we're at. So as far as buys go, let's do a kind of what happens here. Where am I going to take trades? If we start to push out of, in which I doubt on this trade bounce day, if we start to push out of this ultimate high, this all-time high, Here's our all-time high touch, represented by this red line. I shit. Let's see. Let's play it. Let's play it, right? And understand, the thought process when it comes to entering these trades. Understand that we don't play this game to be right every single time. No, there's no strategy. There's no algorithmic system. There's nothing that can allow us to be right every single time. We might have good months where like shit, man, motherfucker, I know everything. I'm right. Boom, 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 boom. Win. It all comes back around, my friend. It all comes back around. So just understand, anytime you enter a position, there is a probability of it not going your way. Hence the importance of leverage, understanding your risk, and cutting the trade when it does go against you, because you can then be right the next time, right? It brings the time that you will be right that much closer. So price starts to push out of here. I'm thinking, shit, let's play this through. Continue to play this up. The amount of times I've thought about just entering a trade at gold and just entering a buy, particularly in gold, and just not touching it. I don't have enough appendages, phalanges to point that out. How many times I've done that? How nice would it have been, like Nick Trader, and it's not as simple as just setting it and forgetting it, naming it and claiming it. There's more to it, right? But to just say, okay, I'm gonna enter a buy here, not touch it, bam. If I was trading my own capital, that'd be something I would do. But in this context, the funded context, you just can't. You need to just to be more careful and stay within the margins of your loss limits. But again, price starts to move up towards this all-time high, and we have volume still with us, right? If we start to push up here, okay, then good buyers volume starts to come in. I could play that. Right. Another play I could make is okay, price starts to move up here. Bam, we get to the all-time high. We don't really have any buyers volume with us. Ooh, I could play this back down, kind of play this zone, right? And here I'm just kind of representing my candle structure. Cool, right? So there's two plays once you get to this all-time high area. If we get buyer's volume and we move to this upper echelon of this zone, let's play it. Let's play it up. Given we have good buyer's volume on our MACD, if we don't have good buyer's volume on our MACD, okay, I might sell off of this zone, right? And just kind of play the trade balance ideology of us just kind of staying within the funnel. Next, literally the same exact thing on this side, right? Simple thought process. We start to move down here. Okay, we kind of get to this decision-making level. Bam. Okay, we get good sellers volume coming in on our MACD. Okay, let's play this fill. Let's play this imbalance fill. Bam. Doo-doo-doo-doo. Just like that. Cool. Next and lastly, just like we did on the bullish side, we could move down here. No sellers volume comes in. And then again, we play the inverse VXT, and we play up off this zone. That makes sense? I hope it does. So that's kind of what I'm looking for on this trade balance day, on this beautiful Thursday, January 29th. Again, this is my first live and it's kind of new system. Marks and I have arranged. It's for a long time we played doing the lives together, but we've found that we're able just to lean into our own insight and ramble and rant about things, the market, much more fluidly and easily when we do it alone. And it allows us to excuse me, it allows us to have 2 separate days where we get to go live on our platform without us both having to, you know, be in a live context in trading, right? It's definitely more optimal for us to trade not filming, not, you know, trying to speak during the whole time, right? So just for our sake, right? This is the way we're going about it. Super excited about it. I want to thank you guys. Thank you for all those beautiful people who have tuned into our live stream this morning. Sorry for some little technical difficulties here and there. I promise we will, you know, figure it out. I make some jokes about me feeling old. I have to take that back because anytime I say that, my OGs get mad, man. I got to respect the OGs. So, so yeah, we'll continue to refine, continue to get better as we do in all things, right? That is the primary objective. Yeah, keep pushing forward. Appreciate all you guys hopping on. It's currently 7:34. I will catch you guys next Thursday. And I will also catch you guys next Tuesday. I won't be live. Marcus will be live. This is my plug for Marcus. He'll be live next Tuesday. I will be in his comments, laughing at him and making jokes at things that he says. Like you said, my favorite streamer, my boy. But yeah, this is Bloom Entities, our platform where we're inspired to spread our knowledge about the trading space, about macroeconomic forces, and the real stuff that is actually going on in the world, right? Instead of rhetoric, instead of emotionally charged and charging comments, right? Hope that makes sense. Oh man, I'm rambling, rambling, ranting, same words. Thank you guys for tuning in. I'm Quentin Gulliver, co-founder, CEO of Bloom Entities. I will see you guys. You guys will see my face next Thursday. Appreciate you.